So, it's loading over there on the two. So again, for what it's worth, if you guys been watching the market, following the market, uh, you know, observing, taking notes. If you're trading this market right now, you've been kind of like, again, trying to figure out, how, what's the extent of the duration of this market at this current status of bouncing off those lows, right? And a lot of that has to do with, again, the idea that, with nothing else, we'll use the technical conversation as the excuse to bring money back in, because we can only sit on the sideline so much with our clients, without our clients' money, and yet they're paying us to be active in the market. So, hey, we'll draw a line in the sand here, right? We'll play off these certain levels, and we'll hope that, maybe within this aspect of this bounce, we're moving to a more, balanced, global commerce conversation where, we can maybe price in, maybe, again, it's weird to say it this way, but price in the totality of this whole Russian-Ukraine situation. Why? Because, of course, if they feel like they can get ahead on that, when that may be coming to an end, then they can start saying, okay, well, now let's dig through the rubble of this. Let's figure out there's money that we can still salvage, excuse me. How can we, open up sort of some of those airways so we can move goods and services across those that may have cost us more money to, to reroute our planes, our ships, out of the Black Sea in that area down there. So there's a lot of things that goes into that conversation, right? When you think about how money works on a global level, right? When people are moving money around and, through different people airspace and their land, and, how we've opened up these trade routes, just, since the ancient times, right? A lot of that stuff really goes over a lot of people's head when they just think about putting on the trade. Why? Because they think, oh man, these people are smart. They already know what they're doing. They figured it out. Run with it, right? What's going on, Oba Mateo in the building? Shout out to Oba Brandon in the building as well. We see you guys as well. All right, welcome my family on the tube side as well. So a lot of those things comes in the conversation, right? They're part of what they call plan of procedure, right? The plan of procedure is, put everything on the table, and then let's see what what sticks, right? See what has value, and what has money merit, as one would say, right? Meaning these are founded opportunities that the market is going to honor at some point, right? Be it now in the future, or the present tense, or in the future. So risk on, as we have been trained to understand that term very well. Risk on. So when I ask that question to you guys, of course, you guys know what that is. All right. So when we say risk on, what does risk on mean to you all, guys? What does risk on mean to you? Anybody want to just jump in there on that? Of course, the floor is open. Make sure my sound is good. So what does risk on mean to you guys? What's going on, Oba? Be humble in the building. Shout out to Oba Sean in the house as well. All right, guys, if you definitely want to come on the link, we do have it out there. This is kind of a light session. I'll put it on here on the YouTube side just in case. But what does risk on mean to you guys, right? The ideal of risk on.
Tread lightly.
All right, tread lightly, right? Of course, if you're engaged in the markets in real time, you want to say to yourself, well, again, given the market conditions, I'm operating under this, under these rules of engagement. Right? Of course, I use that term a lot when I'm, explaining the market or assessing the market, right? What are your rules of engagement that you're, planning today to go into the market, right? If you already have positions on, what are you doing to defend or protect those scenarios, right? So a lot of that, again, it's a, let me cut this out because I think it's all over with Bloomberg. This is the free version, but I got it playing in the background because just using this as a way of keeping up with what's going on. It's up here for a reason. It's a prop, right? The Bloomberg live screen. This is free. Of course, you can play this on your cell phone, your tablet, or computer. You don't have to have a subscription. As you see, I'm not even signed in to mine. So it's just another layer to, again, in most cases, to keep real-time market information or data constantly at or around your fingertips, right? So of course, within the conversation of things that we're trying to I guess, assess in terms of risk, right? We're talking about that to a degree. Got to deal with risk, right? What is risk on, right? Risk on is obviously putting money into the market, right? Saying, we're willing to accept the risk, right, of the things that are, before us, and we're going to trade into those kind of uncertainties, right? Those kind of, how can we say, the factors that are surrounding the global markets as a whole, we're willing to put on risk to kind of, navigate through those things, right? And that comes with understanding certain sector rotations. We speak about that a lot: growth to value to legacy to momentum type trades. Because again, money has to go somewhere. Why? Because, as they say, Tina, there is no other alternative as of right now. The way that the markets are still kind of backpedaling since COVID, and COVID ramping up again. Here we go again. We'll speak about that a little bit. China, actually tightening up its lockdowns even more now. Turned out, today, Shanghai, one of the biggest places in China, besides many others, Hong Kong, and therefore they went into lockdown today, right? Shanghai is going back into lockdown. Well, who did that affect, right? What American companies do a lot of business in Shanghai? Anybody, just off the top of your head, know any?
Apple, Microsoft,
Apple, Amazon,
right? Got Apple, Microsoft, right? Got some major tech companies, y'all know.
Nike.
And Nike. Well, if they got any kind of coordinated business going through just Shanghai, but we already know broader China's already in lockdown in most cases, like Foxconn definitely affects China. Excuse me, Apple and many others. And then you think about Shanghai, like Shanghai, the city of Shanghai, or the province they call over there. What's the one of the major companies over there in Shanghai now? Recently, too. This one, y'all already know it, but it's like, man, it's probably missing you at this moment. They just got a lot of business popping over there too in Shanghai, and then this just happened.
With the car companies?
I don't know. You tell me. Hey, you know what? I'll do like the old school day back in the day. You hot, you cold, you hot right now. You hot. It's on the tip of your tongue. I know it's gonna come right on up.
Tesla.
Dang, there it is. Boom. Tesla, Shanghai Gigafactory. Think about that, guys. They got a production report they're gonna drop literally next week, right? That the weekly production report that Tesla does. Granted that Shanghai factory now at least accounts for, let's just say, hypothetically, before I have to go deep to numbers, let's say it accounts for at least about a quarter or to maybe a third of what Tesla's production right now, since they open up that factory. Think about that. Because Gigatex is still not open yet. Giga Berlin just kind of had that kind of first groundbreaking scenario, so they ain't really got a whole lot of backlog. They got some backlog orders coming, but they don't have production enough to kind of really say, okay, we in the house quite yet. But Shanghai was really accounting for at least about a third or a quarter of what Tesla production, given Fremont production, right? Of course, the California production plant. So that's substantial, wouldn't y'all say? Right? They're going into lockdown, every day they're in lockdown. That's problematic for Tesla. So I'm just saying that because we're thinking about, today's conversation is dealing with duration, right? Equals due diligence and discipline, right? What is duration? Duration is what? Time in the market, right? Time in an asset, time over, money, right? We use that that equation algorithm scenario a lot in our thinking, that time and money is the best mathematical equation ever once you learn how to use it properly. Why? Because you're literally watching money grow based upon compounding interest, based upon equity, expansion, where there's growth surrounding that ecosystem as a whole, where money is attracted to a certain sector. You want to be in this because of this, right? Again, people go to college to get a certain degree programs because this particular industry is booming now, right? These are wealth tracking, industry programs that you want to go into college for, not just Western music, right? Western music ain't popping right now, but this is how right? So we're thinking about that from an investor perspective. This is why these things are important. To speak about them in this regard. Why? Because innovation, number one, has proven to make the world a more, easier place to, exist in or, cohabitate in amongst our other peers or whatever. But also it has to be somewhat of the catalyst to kind of fix a lot of the problems that come along when maybe government overreaches its boundaries and messes things up, or too many greedy people on the, private sector or businesses kind of, run, or throw a cog in the wheel in itself and mess up business flow in itself because, greed obviously overtakes them, messes up the flow of business. There's a lot of different factors that goes into that, right? You need everybody to kind of be a good boy and a good girl, right? And just play within the confinements of helping everybody become more, let's see, giving everybody access to opportunity, right? We know that's not necessarily the case because we know that Main Street and Wall Street are two separate entities, although they're supposed to be, coexisting together, especially when it comes to America. But that's just not the case. Why? Because the value of how government is set up now through the central banking system, we understand that money is only going to attract, other money, right? And if most people are not gainfully employed in markets, right, for the most part, actively, not indirectly through their 401k, TSP, Roth, which is a form of their investment value, but there's still so much more that is being, taken for granted by the average everyday citizen who do not understand the ability how equity markets work in long-term durations. Y'all with me there? Again, as we say, it's a marathon, not a sprint, right? You have to say, well, okay, well, the market in the world is crap right now. We got war, we got, internal conflicts, even inside of America. We have issues surrounding commodity prices through the roof, through the inflation, because again, we priced out the average everyday American during a time when we was in a moment of crisis and they didn't have really a true litmus to base, how they really would funnel that money to the average citizen in a way that they initially tried to program it in our minds that they were going to take care of people. But ultimately that money ended up going to what? Private interest, Wall Street, things of that nature. Again, we're paying for other people's conflict right now. We're giving, Ukraine $13 billion of taxpayers' money for what? Some people may not take that conversation too likely there when I speak about that, but I'm gonna speak from a place where if you pay taxes, then yeah, you want your money to work for you. You want people to, the government to take care of your house first before it tries to take care of others. But we know that's how government does. From the aspect of it's backwards hustling. It always tries to, present an image that is something more than what it really is. And therefore it will make its citizens sit on the sideline and deal with them seeing, government give their money away to other people, right? Again, duration. How long will this go on? Why? Because at some point, somebody's going to say, well, this has to stop. Yeah, we understand that this is bad, this, that, and the third, but it has to stop. Why? Because they're not getting a favorable return on their investment. You with me? People want to be able to see their money working for them. That's a form of an investment. You're investing in the country to make those kind of decisions that will affect your livelihood in a better way. Quality of life, as I like to say, right? So again, a lot of things come into conversation when you start thinking about that, right? Duration equals due diligence and discipline. How you present yourself, how you present your money, how do you present your goals, your dreams, aspirations, this, that, and the third. It's supposed to be a resemblance of exactly, the future that you want to obviously live at some point, right? And you're never too late to get started. Why? Because again, the word duration, right? We talk, long-term for the most part. That could be a week, it could be a month, it could be a quarter, biannual, annual value of a fiscal calendar, doesn't matter to us. It just, sets in motion the fact that at least we're engaging opportunity in a way where, we'll kind of iron out all the differences as we go. Why? Because applied knowledge will help you do that. Understanding what you're doing, how the system works, right? A la how the system works. No more being blissfully ignorant, right? No more saying I just got money to blow and not understanding how important it could be sitting in an asset, even when it may be going through it's kind of bust cycle. That eventually, if it's a great motivative opportunity, meaning the company that produces something that's really actionable, a great mousetrap or, something to that nature where it has, potential great growth, then yeah, you'll weather that storm, right? We're not talking about a company that comes in with this high hopes and dreams and aspirations, just want to get, utilize the public market to build up their, their bank accounts. Then they off, to the golf course somewhere. We're not talking about this. We're talking about companies who actually have a great business model. How you're able to decipher their, business model from another company that just truly is just, take advantage of fleecing what, shareholders. Yeah, Nikola, right? the truck company. They finally trying to get the house in order. Good luck still. Virgin Galactic, yeah, space travel sound fun. It sounded really great in the beginning, but reality is, can they really get people, to sign up at, those kind of levels to front run that kind of business model? And there's many others as well, of course, but just something to think about, right? Something to think about. So duration matters. Why? Because you're trying to put together, a plan, an outline to produce income, right? A secondary form of income, a primary source of income for some of you guys who really trying to take it to that next level. Either way you look at it, it's all applicable to you understanding how this system works, how things work. So when we put on the video again, this past Friday, when we were speaking about, of course, one that we've done before we did it actually during the COVID, during the middle of the lockdown. And it was a great way where people were sitting still, where they can, ingest some good knowledge and information, right? When we ran that video before, that documentary, so-called docu-series, if you will, it was a really good eye-opener for a lot of people. Why? Because it shows you just how much, in advance, the system, the central bankers, the system as a whole plans, to utilize again is citizens, is taxpayers' money, whatever, to fulfill, its agenda, right? Government has an agenda in itself. It's supposed to be for the people, but over time we realize that that's just not the case, right? These people are, pseudo celebrities in a lot of ways, right? They go into politics to become pseudo celebrities to get backdoor lobby deals and this, that, and the third. Corporations, have interest to put people in power because they're gonna push their agenda. So it's not really doing it, as it was designed to do, do the will of the people, right? Of course, this stuff is non-negotiable. Why? Because we see that now firsthand and dealing with how they use taxpayers' money to front run equity markets, front run nations who are in distress because we had bad policies dealing with foreign affairs overseas, Afghanistan. We're giving money to their country still. We're giving money to Iraq still. We're giving money to Libya still. And we're giving money to now Ukraine. $13 billion just went out the back door literally the other day, last week. Again, none of you guys voted on that. You would say, well, consciously, man, that's just a good gesture to do. Okay, well, here's how this works. Again, you're thinking about duration. How long can you last in an environment where you're dealing with, again, still social unrest when it comes to this whole pandemic scenario? It started right back up again. Again, the commodity inflation that's going through the roof, gas, grocery, energy bills, this, that, and the third, the whole list of that before we can go down that rabbit hole is staggering. They still taxing you literally the same with less income, less employment value than we had, pre-pandemic, right? There's no incentives there. Okay, yeah, they got one moratorium left on the books is what? Student loan repayment. That starts May the 1st, unless they extend it, right? So you really don't have a reprieve from that. What else? What else we got? We're dealing with. We got again the war in Ukraine scenario as a whole, and what that does to supply chain issues where a lot of businesses can't conduct, ease of business, after still having to come out of a pandemic. Why? Because, like we spoke about earlier, boats are being rerouted, ships and planes being rerouted, whatever, because of that whole area, that region. Russia is massive, right? Ukraine, that whole region, they're coming through there through Europe from Asia. And now you have to reroute stuff around, around those regions to get to a place that need it. And so a lot of things are going on. Again, you can factor out a lot of different things as you begin to really put an outline in play and figure out how the world is working, right? How is it set up right now, right? So it's important, right? Again, we got to start thinking about it from that perspective. Why? Because money only respects other money. Money only attracts other other money. You have to become, what's going on, Oprah Rich in the building, Rob Rich in the building, Brother Rams in the building as well. We'll see you guys over on the tube, right? Shout out to you gentlemen today, right? Shout out to the fam coming in the building as well. Over Jeremy then popped in, and got some family coming out. Brother Ghost in the building as well, right? Shout out to everybody this Sunday. So again, about an hour and 30 minutes before the future market opens up at 6 p.m., which is, another revealing scenario, because now, again, we have, other things that are starting to press the market a little bit in terms of this whole China ramping up its lockdown. The COVID, this new, Omicron BA20 virus, this new strain, is running rampant again, not just in China, but it's starting to ramp up here in America, right? There's certain states that are starting to feel, the bulk of that virus starting to ramp up in this communities again. So again, and we're going into the summer months, right? So it's like, okay, here we go. But we're more equipped in our minds, I guess, than we think we are. But we'll see how this stuff goes, right? So nonetheless, those are a lot of different factors. I guess I'm trying to convey that they're going to weigh on the equity markets. They're going to weigh on the markets. Now, whether or not it affects the market, that's a different conversation, right? What's going to Open Sunline? We see you in the building. Shout out to Open Sunline in the house, right? Whether it's going to affect the market, that's to be determined. Why? Because if we look at the S&P 500 right now, what is the S&P 500 showing you right now? It's showing you that, like, you probably hear people like a Bluebird, like the guy, what's his name? I forgot the guy's name. Romaine. Like, yeah, we're looking at the market right now that seems to wants to go higher, right? It does. It looks like it still wants to go higher. Given all these things that we're seeing and dealing with in real time, markets like, okay, and let's money got to go somewhere. It has to go somewhere, right? Because there are no other alternative, right? There is no other alternative, Tina, right? There is no other alternative. Again, that's, well, you can say to a degree, yeah, there ain't really too many things you can get invested in right now because of the inconsistencies of business and global commerce. So yeah, why not still be an equity market? It seems to be like a Teflon done kind of, approach to this stuff. But in the same breath, you got to also say, well, at some point, yeah, it may become overly saturated of people, mismanaging certain sector values in a way where it may cause a rift in the markets. Why? Because, where you may say, well, okay, yeah, if nothing else, I'm still going to invest in the darling stocks that we know that are going to do great. Why? Because they have shown to have great balance sheets, great, business models. They're priced for perfection in terms of dealing with these issues. Apple, Microsoft, Facebook, Google, Amazon, Tesla, NVIDIA, et cetera, et cetera. And the first thing you say to yourself, well, okay, yeah, a lot of those stocks are, great because they are who they are, but we're now having to deal with what is the next elephant in the room besides COVID? Anybody want to jump in there and try to answer that? What is the next elephant y'all think the market's going to deal with at least for the rest of 2022? Going into 2023.
Inflation.
Rate hike.
Inflation, right? So inflation, right? Rate hikes, right? Rate hikes, inflation. Anybody else want to jump in there?
I was going to say midterm elections.
Midterm elections. Boom. Yeah, y'all hitting some really, really, really key points here.
Cost of wheat. And,
right? So cost of wheat. So we're talking about food, right? Food, the value of supply and demand, right? On the commodity side of things, right? Which is very important because I'm sure y'all been seeing the article like I have, right? There's a major food shortage that's going to crop up here. They say the next 2-3 months. It's already happening anyway because we've been seeing shelves around the country in certain areas where they're empty. Like you can make this stuff up. Here in America, of all places, shelves are actually empty in certain stores in certain locations. Like you couldn't make this stuff up, right? Like I just even possible, right? This is third world stuff. But this is it. This is the reality where you have to start looking at all these different things and say, okay, from a duration perspective here, how long do we have, to get this house in order? How long do we have to get our investment portfolios in order? How long does the market have to deal with all these different issues before it pretty much says, you know what? Okay, yeah, we tried to keep the market propped as long as we could. We don't see, really a great growth story because we're hearing GDP contraction over the next 2-3 years. We're talking GDP contraction. That means at least a third to half. In some cases more, it depends on whose, economic outlook is. That's pretty big, guys. They're saying that hence the whole scare about we're going into recession. Why? Because y'all know how recessions come about, right? Recessions are born from what? many dollars chasing too few goods, less production. Less production obviously means what? A strain on your GDP. And if you have more than what? 2 months of what? GDP contraction, that means you inherently are in a what? A recession. Two months of negative growth or what they call no growth at all. Essentially, that means you are in a recession. That's on the technical, well, I should say the fundamental side. The technical side is what? When you have what? Which
10%
2 months,
2 quarters of 10% downturn.
Right. Well, that's on the fundamental side too. On the technical side, what are the 2 treasury yields that we look at to assess that level of recession?
The 10 and the 2-year yield, and the
10 and the 2-year yield, right? That 10 and 2-year crop gives you an idea of whether or not what we're starting to be, somewhere, in no man
yield curve,
right? And it's starting to flatten, right? That 10 and 2 is starting to flatten. That means we're getting ready to what? It's showing you in so many ways. That I'm just using layman terms here, guys. It shows you in so many ways that we're having contraction and what? And growth, right? People not putting on good paper. They're not holding good paper, and they call it good paper. That paper becomes bad. When we say paper, we're talking about bonds, right? You're buying, debt in a sense, in essence, that it will mature, respective to its time duration in a way where, this is a safe haven to deal with what, the back end of markets if they fall to a fail. Well, we know there's a lot of things pressing the what? The front end of the house. The front end of the house going to be what? Equities, right? The back end of the house going to be what? Bonds. That's a good way to look at it. The front side of the house is equities. The back side of the house is what? Bonds. So before, they used to have this terminology where you should have what? Like a 60-40 portfolio, right? Some people had what? 70-30 portfolio. Y'all heard that breakdown before?
Yes,
what is
sir.
a 70-30 portfolio? Anybody?
70 stocks, 30 bonds.
30 bonds, right? And if yields are starting to be a fleeting, business venture now because of the fact that the market has somewhat, well, I'm not saying you got the market, the Federal Reserve. What's going on, Angie? I see you in the house. Peace, power, and profits. It's Angie in the house on the tube side of things. If the Federal Reserve has overcompensated, essentially what they've done, we're not going to speak in parables if they didn't, but the fact that the Federal Reserve has overcompensated its mandate and now has priced out literally the middle class by printing so much money that it pretty much, backwards, it was backwards hustling. The fact that it was trying to help America, it actually made the issue of the middle American taxpayer situation that much more dire and worse because it caused what? Inflation, right? You had all this money chasing to feel goods. Why? Because we had a stagnation of what? Of production. People were home from COVID. People dealing with supply chain issues, and other nations were fighting to get their house in order because of coming out of the pandemic. It only exacerbated the issue, right? So now that duration, right? Using our favorite word right today is duration. The word of the day is duration. Now you have to what? Plan a little bit further into the future to get through all of this, right? Do your bill assessment. Again, if you got investments out there with your investment assessment, it's not going to be like it was the last 2 years when it was just what? Throw anything at the wall, see what sticks, and invest in it. Why? Because the gravy train was great. Anybody that was giving you high flying growth, stock investments, I should say opinions or advice the last 2 years, everybody looked like a guru to a degree. If they were honest, they would have been balanced and say, okay, well, yeah, this part ain't gonna last for so long. And here's how you want to plan to slowly wind down when it starts to come to an end. Why? Because this is abnormal. Markets typically don't operate under a mandate where you have a Federal Reserve pumping $120 billion every month to securitize its debt in a way where the market could never fail. This is like putting double cement and steel underneath your foundation of your house and thinking, you're gonna have bugs crawling up through the bottom of that, getting in your house. It's not gonna happen, right? It was an ironclad mandate, and Wall Street hawks or people who know this stuff exactly plan to benefit from it the most. Why? Because this is a free, as they call it, helicopter money. It was a free for all at the trough of Wall Street. Never in the history of America where they had this level of accommodation from a Federal Reserve again, given the fact that we know we was dealing with COVID in our own way of trying to figure out, what will we need to deal with a nation like us, going into lockdown. We never experienced that before. But like most cases, I've said this many times, they can overshoot and say, we messed up in the back end. No one goes to prison. No one gets cited for it. No one gets fired. And when that money goes down ran, you can't recall it back. It's not like doing a recall on a bad airbag. It's not like when the IRS overpays you in taxes and they come back and get that money, right? They'll come back and get it from you, but they can't and will not go get it back from Wall Street. Because now that money is already printed digitally and it's gone down range and it's in the hands of what? Every John Doe, Jane Doe, Rich Doe, whomever, right? Everybody benefiting from that, or those who are engaged in the markets, I should say. Mind you, you have to be engaged in equity assets that have the ability to accrue interest. If that's not your forte, you're waiting on the government to give you yours on the back end, right? Child tax credits, whatever, EV credits, COVID stimulus checks, but that was a pathetic, ploy, right? We'll leave that alone. Again, they utilized the value of saying we're going to tax you well into the future through, printing money, because that debt goes into the national debt, which we have gone up over 30 trillion now. We basically at 30 trillion. Well, who's going to pay that bill? Wall Street. They benefited the most from all this money printed. So why shouldn't they foot the bill to pay for it, right? The whole idea of, I'm not going to get into that because I don't want to make it sound political, but it's just a conversation we talk about when we're thinking about long-term growth of our markets, long-term growth of our political landscape, and how that may affect markets. Why? Because y'all spoke about that inflation, right? Raising rates. Brandon spoke about midterms. We got a midterm election coming up literally Q3 of this year. And it's going to be wow. I'm just going to say that, right? I don't do political parties, even though I study political side, but I can tell you right now, it's going to be a wild midterm. Man, look, I'm pretty sure y'all already know, right? It ain't going to look good the way people probably thinking it's set up to be. Why? Because people are looking at the current situation, again, not picking sides here, but they're looking at the current administration saying, okay, you guys got all this smoke, right? Y'all got all this smoke for dissenting people who are asking, or who put you into office, for whatever value, and you're not really doing what you claim that you were going to do. Yet we're seeing you constantly just giving money out the back door, out the side door. You're just sending money everywhere except to the people who actually put you in office. Again, that's just my assessment sitting back as the armchair, political analyst, right? But I'm seeing that through the markets too, because markets are trying to price in the ideal of what this will look like at that time of the year. Again, we're talking about duration here. Due diligence and discipline, it matters. You have to plan accordingly, right? Because your portfolios are now in the midst of that blazing fire, right? We just saw a market bounce here. Again, look on the screen here. We just saw the market bounce, basically dealing with this whole issue with Russia, whatever, right? We came down and low, hit a low of like 410, right? And that was based upon the idea that this whole theater was kicking off in terms of Russia, quote unquote. But let's be realistic here, guys. Let's be realistic here, right? Right. Let's be realistic here, right? Oh, I forgot I got it. I don't have it logged on. All right, no worries. We'll just back it up much as we can. All right, let's be realistic here. This is an extension of, again, people feel like, okay, well, we don't have any other alternatives. We already know that the economy is going to be kind of slow, very low to slow single-digit level of growth. In this case, we say single-digit growth, but GDP is typically always around 4%. But the ideal of we was having the ideal that could be, anything beyond that has definitely gone out the window. Now we're talking maybe 2%, somewhere around there, 2 or 3%. 3% be best case, 2% into that range of 1% probably be the best assessment, right? Why? Because we overshot, right? We did overkill, and we wasn't methodical in handling our books in terms of our, economic situation. What do I mean by that? The Federal Reserve, again, used their power to, in a way, supplant a unrealistic view in terms of the economy being safe, well into, dealing with COVID in the future, us getting back to place of prominence and employment, full-time employment, as they said, maximum employment, which was a lie. And all those data points were wrong. Why? These people supposed to be Ivy League educated economists, market participants, financial analysts, financial market majors, and they're dealing with antiquated data that has now blew up in their face than they can even imagine. I like to take the approach that I think they already knew that. I think they knew that in advance, but they still chose to look the other way. That's just my opinion, right? Nobody don't have to go down with me on that ship, but I can assure you, from a lot of my study and looking into how they do business and how they've done business, going back looking at the old Federal Reserve chairs and the Secretary of Treasury and how they've been able to morph over time, and going back even as far as Nixon and going back, during that time of Carter up until now, there's been a major shift in terms of how these people have gained so much power. The Federal Reserve, in a way, through the central banking system, how they've been able to become a parasitic entity onto that of its taxpayers, and now utilizes their business practices in a way to really float those who are more wealthy. Right? Let me put it in layman's terms. They found more intricate ways to take money from poor people, middle class people, and give it to the wealthy. Right underneath your nose, and they tell you what? Well, you should be happy. Why? Because you get to go to McDonald's at 2 a.m. in the morning. Right? You got a road cleanup crew that comes to pick up trash sometime in your neighborhood, right? Those kind of small amenities are supposed to be good, while the average person can't survive off one salary income alone in America, when it used to be back in the 50s, 60s. Well, in that time frame, one person can live to stay at home, and a person can make a living at the level of what a person would make it today with that of a master's degree, put food on the table, and put the kids into college, and everything will be fine, and own property. Well, those days are long gone. Why? Because, again, greed, theft, and again, the ideal of bad policy has priced the middle class out of this game. Literally. We're seeing that there's not even going to be a buffer class any longer. Possibly going to be either those who have and those who have not. It's going that way. It's not even, hyperbole to say that. Again, we're talking about duration today. How long of a time plan or time horizon and game plan do you have in order to at least protect your situation? Be it you own a property, you trying to fight to get into the housing market, at least to have some kind of, equity stake in that game. And that's starting to go up now. I don't know if y'all saw the other day, Stat came out with the mortgage, 30-year mortgage back lending interest increases. I mean, we're literally up in the 4 or 5s now, somewhere around there in some cases. And some people, they just shot up overnight because it's inflation. And the fact that now the Feds, since they're behind the curve, now all of a sudden they got to start, raise rates, exorbitantly faster and higher, which is bad on markets as a whole, because it's like stress testing, like shocks on your car, right? It's like, you got, you going on the road, you got that back of that trunk or that back of that little SUV, I mean, swollen with big old, 100-pound, 200-pound barbells, so, and your shocks back there just crying, they bleeding. That's essentially what happened here. The stress test perspective now, because they didn't take the time to make sure they reinforce those shocks, those struts, again, knowing how much weight it could take. Now that you have to make one big trip all in one, you can't do several trips. It's going to stress the markets out. It's going to cause rates to run up quickly. Hence, that's why we have these yield inversions. We already have 2 yield inversions right now. I think we have the 2-month, the 2-month in the 10. We have the 5-month in the 10 as well. I think is it 7? They're already inverted. And we can go check this stuff. Of course, we won't have to even speculate. All right. This is what we do over here. Of course, we're going to go to work and teach people how to fish, respective, right? To, know exactly where to go, how to look, look for certain information, whatever, right? So let's go really quick here. And let's see what those yields look like that are inverted right now. They are literally inverted right now. And these are not what they call, they are one-off type of events, right? These are one-off events. Wrong, right? Is it wrong, right? This is stuff that they cause, essentially, right? They cause this, all right? So let's go here. And we can go to Fred and look it up as well, all right? But we want to get people knowing exactly, where to go to look for this stuff in real time. So hold up, I'm not sharing the screen over here. My mistake, 1 second. Is it showing? It's not, okay. All right, so you come to treasury.org, right? U.S. Department of Treasury, right? As a matter of fact, let me back out, show you where to go. Well, you come into treasury.gov, you hit, you can hit this top tab up here where U.S. Department of Treasury, right? Whatever. You come over to the data tab here, as you guys can see here, the data tab, click that data tab. As you see, here's all your issuance dealing with debt, bonds, ratings, all that stuff like that, treasury coupons, or corporate bond ratings, all this stuff like that. Archive data points, whatever, monthly treasury statements, daily treasury statements. And you're going to click on, you can do T-bills, whatever you can do. But, you want to click on treasury par yield value, right? You can do curve rates, yield curve rates, that you can do that as well. If you want to just check the base case rates, then you just, this will give you an understanding of what we look like in real time, right? And for the most part, as of today, right? This is as of today, basically at this point, we're showing 2022, but it has those dates sequentially here. What you want to look at, which is Friday, right? Coming out of Friday, right? Here's your breakdown. You have the 1 month, 2 month, 3 month, 6, 1 year, 2 year, 3 year, 5 year, 7, 10, 20, and 30, right? So anytime you have what they call a yield inversion, right? Let me get my little pen out, right? My little ink pen, right? A little ink pen. Oh, look, where we at? Make sure my color. What's color we at? Oh, we got this. Yeah, let me change the color. All right. So right here, we're gonna focus on this line right here. So these lower bonds are respected to, short-term duration debt in sequence to that of what? Long-term duration debt. Again, houses, car notes, things of that nature, credit cards, they're going to be on the higher end, right? Typically, you take out a credit card, you plan on holding it for definitely more than 1 year for the most part, right? The same way with a car loan, right? You get it financed, a house, it's already based on 30-year fixed. So you already get that unless you do a more radical approach to paying off your property. But these shorter term debts are just base stuff, fintech type of little debt incentives, things of that nature, not necessarily crazy stuff. And so if they start to ramp up higher than of the long-term debt, that's problematic, right? That's problematic of growth, where people are now being more anytime you have yield inversions, that essentially equates to more people are beginning to do what? Save more than spend more. And a lot of their saving may not be just because they want to save money for a rainy day. It's because they're being forced to save, because they're being priced out of the market, right? And whatever duration of time that they're dealing with now, they're being priced out of the market. Well, who's pricing the middle class out of the market right now? If we had to make that assessment, what's causing the middle class to think about saving more now or being more consolidated with their money spending than before? Anybody want to take a stab at that? What's causing that right now? What's causing people to save money right now? Anybody?
You said what was causing people to save money right now?
Mm-hmm.
Oh, higher prices.
Okay, higher prices, right out the gate, right? Right, yeah. Higher prices due to what?
The government spending money,
inflation,
printing money.
Right, so there you go, right? So inflation, right? So you got inflation, right? You got government, right? Printing, right? So you just put gov, all right? Gov printing, right? Right, which are the two main ones, right? Say, wait, you have to go further after that, right? Inflation and gov printing, right? They're being priced out. Again, too many dollars chasing what? Too fewer what? Too fewer goods. Make sense? And when that is what they call prolonged or it becomes stagnated, then it becomes a game of what? We're not necessarily dealing with inflation any longer. Now we're dealing with what? Starts with an S. Now we're dealing with what?
Stagflation.
Stagflation. Hence, that's the talking point that everybody's dealing with right now. All your big time economists, Larry Summers, L. Herring, whatever his name, I could be messing his name up sometime. Jim Rickers, many other people who are, old school economists and new school, within that, they're being able to kind of get their information out. they're starting to, speak to that, right? They're speaking to that. Again, we heard Jeremy Grantham, right? Old school, Wall Street, legend in this game, if you want to call it that, speak about the idea of the bubble value of markets and how, we've kind of, priced ourselves out of our own market. Why? Because we got drunk on what? Cheap money, cheap low interest rates for so long in a way where you had less production. That's not how economy works. If you're a debt-based society based on capitalism from this perspective, if you do not equate that of your cost of living or your what they call the quality of living for your patrons, in this case the citizens, where you can get them ample raises to meet that of the level of the cost of living that's going up on them every year, then you're going to have a failed state at some point. It's going to come crashing down. Why? Because you're going to get priced out of the market. They're pricing you out of the market. They're pricing you out of the grocery store. They're pricing you out at the gas station. They're pricing you out at Home Depot trying to buy your lumber to build your doghouse. They're pricing you out at, in many ways, aluminum, whatever you buy on the commodity side is through the roof now. And before they kept telling y'all it was transitory, it's transitory. They used the duration game on the average citizen. They kicked that can down the road as long as they could, and people kept buying it, kept buying it, kept buying it. And that necessarily wasn't complaining because they said these people are smart. They know what they're doing. Well, it turns out they didn't. Again, I beg to differ to say I think they did it purposely. I've been speaking this for almost like 2 years plus. Y'all were right here with me. So it ain't like a lot of you guys ain't new to me. Y'all know we've been on a trail of their heels going back when COVID, before even COVID kicked off. We go back to tariffs. We were breaking that down when they started QE up again back during September 2019. They started QE up again. Here come the printing press again. And that just exacerbated the situation even more. As soon as by the time COVID hit, that really opened up the floodgates. It was just like, man, it was a perfect storm. They become a millionaire, a trillionaire literally overnight. If you really had that kind of level of allocation to work with. Again, we're talking about bigger lot sizes in the market. Well, given the hindsight, we all been like, man, I would have bought me some LITE calls, right? Durational LITE calls and just sat on my hands for the whole year. But see, this is the reality of getting properly schooled, educated, get some proper understanding of what's going on. So in the event that these buzzers ever come around and try to pull a stunt like this ever again, you'll be prepared. Each and every one of you guys are going to be prepared now. Why? Because you're realizing how to utilize your tax dollars to foot and fund the growth of that of these oligarchs here in America, these rich CEOs even outside of America that benefit from off our markets. They use taxpayer dollars to bail these guys out, essentially. Couldn't make this stuff up. As if, they missing meals, as if they have problems with paying their lights and rents and mortgages in most cases, right? Again, like, Shamat said, right? Palaha Patil, right? Who cares, right? They can't spend a summer in the Hamptons. Who cares if they can't, take the private yacht out? Who cares if these people miss, the next, whatever event when Main Street people are getting drugged through the mud right now. Hardworking people are getting drugged through the mud. Why? Because they're too overly worked and underpaid. A lot of these people ain't got the energy and the strength to muster to go through, listen to the information that we're putting out that has to deal with how the system works. They don't see no need in it because they actively don't feel like they need to engage in it. Why? Because they got a job. They feel like that's just enough. They got a fighting chance if they just got a job. Forget all the extra knowledge and stuff that I need to know about how my government works, how the monetary system works as a whole. Anything dealing with yields, interest rates, this, that, third. Course, they pay attention when they get to buy a car, right? Go buy a used car, a new car, or buy a house. Then it matters, right? Or they want to get credit. Yeah, but it should not stop there. It should be a continuum of figuring out how to stay ahead of the government as much as they're trying to keep you blind to how they're stealing your money anyway. It matters. Why? Because we don't get a do-over in this. We got one shot on this earth, on this rock. And the longer it takes us to figure out how the system works in this regard, the more and more it's going to put us at a desperation mode to try to figure out something to do later as opposed to earlier. Why? Because we were priced out from the beginning, right? Let me just say that. A lot of us were priced out from the beginning. It's like we were written off before we even had a chance. Why? Because the system was set up to obviously protect, certain people. We get it. now that that has kind of really, opened up, that can a little bit, and people are becoming more aggressively excited about figuring out how financial literacy really works, then guess what? It's game on. One second, guys. All right. So, this is the extent of why a lot of us are now becoming more, I should say, excited about this opportunity, in my opinion. Why? Because we realize now that we feel like we maybe didn't have time before. We didn't understand the value of how it really does work in your favor by, taking the time to learn this methodically and don't feel like you're in a rush mode because the market ain't going nowhere. Even when it's acting crazy and doing all this stuff like it's doing now, it's better for most people who are not, familiar with these kind of markets to sit on the sideline anyway, because of the fact that Wall Street is somewhere running scared, they're greedy, they've been greedy for so long, they don't know how to deal with this kind of marketplace. So they're going through withdrawals essentially. And that's why you get this, erratic stock movement, just all these things that are happening around the globe as a whole. Yet the market says, we need to be, perched up, running higher, forgetting all these things and pricing it in, as they say, pricing it in. All right, utilizing whatever aspect of stimulus or liquidity that's out there to kind of give ourselves a fighting chance to see if we can get through all of these problems before, the proverbial crap hits the fan. If there is going to be such a scenario. And now that, the base case bad problem is if we kick off this whole World War III thing, right? As if inflation really is secondary in terms of right now and dealing with how the Feds have priced everybody out and yield inversions are going through the roof, commodity prices through the roof. It's weird when you think about it, right? But we know that you have to be immune to your personal feelings about how you think markets should be responding, how they should be responding, and start focusing on what you need to be doing, in essence, to protect yourself and take advantage of the growth spurts that are coming, in the fact that Wall Street obviously thrives on being greedy. It's odd when you think about it from that way, like, man, who wants to think about it like that? But that's essentially what's happening. Greed begets greed. In this case, they're using your money already, is my point. They're already using your tax dollars to fund and fuel their dominance. How are you going to convince yourself that you're going to be able to beat the system in this perspective, and just waiting on the system in terms of Congress to give you your just do your fair share of what they're taking from you through policy? We were just firewalling the idea of whether you was for or you against the idea of the infrastructure bill, the Build Back Better, all this stuff. They were going through that whole charade like they always do, right? In Congress, literally about 3-4 months ago. Instantly, in comes this whole issue with Ukraine. They have an emergency congressional meetings overnight while everybody sleep. Literally had one at 1 a.m. in the morning and passed $1 trillion package to deal with this whole issue with the supply chain, or they call it infrastructure, a supply chain issue, and that the Ukraine situation overnight. Penciled in $13 billion to go to Ukraine without your permission. $13 billion. And yet they were supposed to take care of student loan debt for people. Still not happening. A lot of stuff dealing with, surrounding around the child care. That basically terminated, right? They didn't extend it. That's gone. The idea of, again, this whole infrastructure bill with roads, bridges, and all that stuff, it's coming when, right? But they did an emergency $1 trillion package deal when they were pushing back against it the first time for the Build Back Better. It got reduced from 3 or 4 trillion down to 1 trillion, and then they turned around and approved it for this whole issue with Ukraine. I'm just saying, if they ain't pricing you out the market and spitting in your face and tell you that it's rain or whatever, then I don't know what else to tell you. Why? Because this is the game. These are the games they play. We ain't got money for this. We don't have money for that. We don't have money for whatever. But instantly, overnight, they voted for $1.5 trillion. Stock government fund, all this stuff like that, paid, keep the business, government running, all this whole stuff, government shut down. This it's comical, right? If you know any better, you'll be like, man, this is some great comedic relief. But again, this is why these conversations are necessary, because on a long-term horizon, you need to set proper duration into perspective, be it, again, a week, a month, 3 months, 6 months, or a year, and longer than that. This is the importance of proper duration, understanding the proper aspect of duration by utilizing good due diligence and discipline in terms of how you're going to map out your money. But longer than that, what you can see, sitting and resting in your pocket, right? As they said back in the old days, you got a little couple dollars, it burned a hole in your pocket. You can't wait to spend it. But you have to start realizing that game plan ain't so prevalent right now. Because if you take the approach that, okay, inflation is going to magically at this point start just cratering, it's peaking here. We've already peaked in inflation. We're at the top of the peak. And at this peak, we're going to start kind of leveling off and start curling off and coming back down now, like the COVID spike thing. If you're thinking that right now with inflation, I can assure you, you need to change your news source. Inflation is a problem that once it gets out of the bag, it feeds off of desperation. Because the fact that you allow it to get out of the bag, it's kind of like one of those, man, I don't even want to draw that conclusion, but it's kind of like a virus in itself. Essentially, that's when inflation happens. Once it gets out in the public, it can wreak havoc. Because now you're dealing with the human aspect to this, which is that corporation can say, well, guess what? Why should I have to worry about, trying to, work my employees just that much harder to balance out that deal so we can bring the cost of inflation down when I can make more money with less production, less product outflow, and I'm doing it under legality of dealing with what? The inflation that's coming on the back end of what? The taxation, right? Or the lack thereof, or the value of, the government not really what? Helping the citizens in a situation where they can fight, the price gouging, or not even price gouging, but the prices at the grocery store by them, brokering better deals for the citizens. I'm cool. I'm just going to raise my prices of my products or cut down shrink the packages, keep it the same price. And now all that extra profit that they're going to take in, trust me, that stuff doesn't go back into the what? Mainstream society. They're not going to pay more taxes on that. They're not. That money goes into the pocket of these CEOs or the investors who invest in these companies. And it's legal, obviously, right? As they say, don't hate the what? Don't hate the game, right? Right? This is the reality. Or don't hate the player, hate the game, so to speak. You don't hate the player, hate the game. This is the reality of how this stuff is set up. So again, you have to be comfortable in your skin, to be patient and work with the system and how it's set up in a way where you can come out on the back end of this victorious. Again, we talked about the yields, right? Yields are basically, teetering here in aspects of inversion. Just really quick here, going back to our chart here. Let's do this really quick. These are the ones that are already inverting right now. If you looked at this little area right here, again, we already know which ones they are. I don't have the whole screen up, but we got, let me move this out of the way here. All right. So again, we have the 1 year, the 1 month, 2 month, 3 month, 6 month, 1 year, 2 year, 3 year, 5 year, 7 year, 10 year, 20 year, 30 year, right? This is the most latest, these are the latest numbers of the treasury yields, right? Right. Bond market, T-bills, right? Instantly right now, y'all already see which ones are already inverted. Why? Because if these numbers are bigger than the back end numbers, that's a problem. First one we see essentially right out the gate is what? This one here to this one, inverted. This one here to this one, also inverted. What is this one here then? Why is this one, lacking in terms of what? The value, meaning if this number is staying stagnant and coming down, and these ones over here are going up, that means people are essentially, in order for yields to go up, that means people are what? Dumping bonds. They're not holding our debt. They're dumping this bad paper in their mind. I mean, it's dead paper. So if they're dumping bonds, that causes the yields to rise, to go up, right? That causes yield. You dump bonds. I had to put the equals out here. Yields, right? Yields go up, right? Yields go up, right? Y'all with me there? Everybody with me?
Yeah, high interest.
High interest rates, right? You're gonna pay more for that credit card now. You're gonna pay more.
Yes, sir. Yes, sir.
If you get a new one, right? If you ain't already get you one with a low interest rate, boys, it ain't sticker, adjust your rate. But at least you got a good ways to go if you got decent credit. But now you try to get some credit now, boy. Look, they're gonna let you like, look, bro, we can spot you at 0.6.
That's just how you late to defaulting on your debt.
Exactly. They're gonna eat off you twice. They're gonna eat off you, but they eat off you more than that. But we went through this, boy, they play a dirty game. So this one here particularly is that 10-year, right? This lane right here is that 10-year. This is the benchmark yield or your bond that everybody watches, that 10-year. Because that's about the natural duration of what most people get locked into that has the aspect of building decent credit. You have to hold at least a bond value for at least a minimum of 10 years of maturation. Student loan debts. Some people, again, y'all know how this stuff go. The average person who's fiscally responsible, they own a credit card, a certain credit card for at least a minimum of good 10 years. That's a statutory value of good credit worthiness. If you can hold a debt for 10 years plus and keep it, what they call neutral or positive, that means that you are legal participant and keep holding up our the credit worthiness of the U.S. dollar, the country as a whole, in terms that we're good at not defaulting on our debts, whatever, which America does a lot, but tells you that it doesn't, because we borrow more than we produce. So therefore, we're a nation of what? We're a nation of creditors and debtors, but more definitely debtors, right? And it's tragic. So instantly, the 10-year is already hit on this note and this note. This one here is teetering on the edge of what? Being overtaken really, really quick, really soon, right? By base case definition, because these are supposed to be organic readouts. These are things that the Feds can only manipulate if they buy the bonds. They can't do it through just going ahead and changing the numbers, right? Unless they get really desperate, right? Which would be hard. But these are organic indications, guys, of your economy. Organic, right? Only way they manipulate them is they buy bonds illegal like they were doing since they stopped that program, the quantitative easing, which they still add money to the balance sheet. Go figure. We spotted that, 2 weeks ago, caught them red-handed, and there's more added to it since then. I think they added another, 8 billion since then, on top of the 40 some odd billion that we caught last time. So they supposed to stop and they still print money. These people are, again, parasites at the worst level. But anyway, again, getting back to conversation here, we already got some yield inversion. We got two, right? We got two that are already inverted here, right? Those are, of course, if we go up here, we got the 3-year and the 5-year inverting on the 10-year, right? This one here, let me circle it. We got the 3 and the 5 inverting on the 10-year. When the lights, they say when the crap really hits the fan, is when that 2-year catches up to that 10-year. Right?
Yes, sir.
Y'all already know at that point. You make sure you have using whatever you little freezing. Right?
Flattening the curve.
Right? Make sure you have your little couple of extra boxes of grits in the cupboard somewhere, some canned goods somewhere. Right? Some bottled water, get you a spring somewhere you can go. Siphon you some water or something, get you some thing where you can siphon some gas out somebody with a gas tank. Now, don't y'all go out and do that. Because it's going to get real ugly. Because if you have yield inversions, on top of runaway inflation, ooh boy. That's
and has been hit.
Man, that's when it gets really ugly. We only dealt with inflation, recessions when we just had bad fiscal policy because of one-off events, again, dealing with tariffs and something crazy. And they fix it right away. But this time it's not the same, right? It's not the same now. Why? Because we got runaway inflation on top of that. and you have inversion with a recession, recipe for disaster. Wall Street will have y'all believe now that we're in the all clear. We're good. They're going to fix this. Well, wasn't they taking that same approach, last year? Was they not taking that same approach? Mid-cycle 2020. Second quarter, third quarter, especially into the fourth quarter. This whole idea is transitory. It's going to go down. We're printing just enough to keep, in a time horizon where we'll be able to kind of backstop all this stuff. By the time Americans go back to work, that production level will catch up with that of our debt to equity ratio, so to speak, as a country, and we'll be fine. How bad did they miss them numbers? How much were they off? like way off. And these supposed to be professionals. Ivy League is this, that, third. We armchair investors. We figured this stuff out way before they did. Well, why? Because, like I said earlier, they didn't have, these people knew what they were doing. They knew what they were doing, guys. Let's not even, they know what they're doing. Do you think they care? Do you really think they care about the average everyday American? Look how long they've had. Again, we talked about this on our Urban Economic Empowerment show. Shout out to the Urban Economic Empowerment show, Eva, Monica, and the family come through over there. How long have they held the federal minimum wage rate at $7.95? Man, we did a video on that. How long it has taken America to give America a raise, essentially? The last one came, the last 6, 7 years, somewhere around there? A lot longer. The one before that came, around early 2000, somewhere around there, some crazy number? You talking about $7.95 an hour. And inflation is essentially, but now they're just starting to go up recently. They forced to go up to 15, right? That's for all this whole congressional stuff. They've been forced to go up, and that's still not everybody quite yet. That's some people. It should be federal mandate at 15. But again, what the big money people tell y'all when everybody starts saying we need to go instant to $15? Main Street is being greedy. It's gonna cause y'all to lose your job because that's gonna force CEOs to become more automated. They're gonna find better ways to cheat the system to make more money. So essentially, they don't care about your well-being anyway. Then,
right?
Like, how do people keep falling for this? Like, make that make sense, guys. They're gonna convince you that. I don't know. It gets depressing sometimes. I be sitting there going through all this data and I'd be going through the comments and stuff like, man, I missed a lot of this information at a time when I really needed it the most in my life. Now that I'm getting a lot of it, it's sad because a lot of people are just they're gone. They lost. It's not today that they want to be. It's like, again, the idea of even teaching financial literacy in America is a joke. Shout out the state of Florida, my home state, right? I'm gonna give credit where credit is due. Sidebar conversation. Shout out to the state of Florida. Retarded behind Ron DeSantis, as weird as he is, he did something last week that was larger than life. I posted it. Some of you guys already read on that. He did something that was larger than life. And we've been talking about it forever, of course, but he did something that most of the other states around this country have yet to do. The fact that it's not even federally mandated in itself is a joke. But he did something that was very, very outstanding last week. What did he do? Anybody know? What did Ron DeSantis do, as the governor of Florida, do this last week?
He put financial aid in high school. He started a course in high schools.
Financial literacy.
Say again?
Financial literacy.
No, go ahead. Say it again. Say it again with your chest. You going in, right?
He put financial literacy in high school.
You breaking up over Brandon. God, dog. You breaking up.
He put in the financial literacy class.
He did what now?
He trying to put in financial literacy classes and literacy classes in high school or into the school system.
Boom. He's making financial literacy mandatory. It's not going to be an elective any longer. Shout out to the state of Florida anyway, because there was one of a few other states that didn't even teach economics as elected. Certain parts of Georgia, some other states don't even teach it all. They have it, but it's weird. They're going to make it mandatory, where you cannot graduate unless you have at least a base case understanding of some aspects of economics beyond the base case, or just learning how to work. This is a checkbook. This is how you balance a checkbook. This is a router number. This is no, that stuff is like, no, that's so 1960s. They're making it mandatory now. Mandatory. And y'all can go pull the articles up. I don't want to spend too much of our time really going into, we'll do it on maybe another show, because they're making it mandatory. In 2022, it's other states out there still yet to even understand the importance of that. How people are, the fact that you have debt, roll over so much is because people are financial illiterate. As much as they tell y'all, they get y'all, convince y'all that we're not, and we're a great nation, we this, that, and third. This country is not invested in making y'all educated on how the system works. Think about this. Because if you're not gonna be, doing anything. Again, I call it Anarchy 99. Y'all know me. Y'all know my conversation. Y'all know my talking point. We the money crats, right? For a reason. We're breaking the mold, right? We're going beyond the conventional wisdom and thinking of doing things in a safe, right? Like those who are scared to break the barrier, then guess what? You're gonna accept what the government give you. If you're tired of that, then guess what? Again, come to death row record, or get with anybody out there that's teaching financial literacy, respectfully to the situation that we're dealing with at hand. And into the future, where you can backtrack everything that they're telling you. You can research it through research methodology and figure out whether or not these are primary sources or not, because everything that comes along with this, even though it's still shady and crazy and funny money, it could be backtracked to a source. That's the greatest thing I love about this, because it eliminates the average person from feeling like they're only working with a limited aspect of information. There's a plethora of information that you can get when you come to the financial literacy side of the house. Even before you can go to the public side of the market, and you're dealing with companies when they're putting out SEC forms and updating their shareholders, et cetera, et cetera. Even on the private side, you can go look up a company's private holdings. They have to report that information, even if they're not publicly traded. They do, right? You can pull all that stuff up, all of it up. So again, it's becoming prerequisite now. Well, at least for the state of Florida. Shout out to the state of Florida again. Yeah, I had to wear the shirt today. Financial literate, right? We're gonna wear these shirts. It's a t-shirt moment. We're gonna wear these shirts. Shout out to my brother Ryan McCrary that came out with the financial literacy shirts, right? Been supporting our brother for quite a while. This is the reality of how you need to start propping and positioning and brainwashing your children to know these kind of things now. To understand the importance of the treasure.gov site, to understand the importance of Wall Street and equity and real estate, business ownership, taxes. Look, we can't play that game anymore that I didn't know. And then you send your kids out there to the slaughterhouse financially. We can't play that game any longer. They're going to get priced out. With or without you telling them, they're going to get priced out anyway. This is the cycle how durations work. Duration is a game of patience, due diligence, and discipline. Proper research methodology and patience. Why? Because I can wait you out. What is it saying in Wall Street, guys? Markets can remain what? Anybody? Markets can remain what?
Rational. Yes, so.
Markets can remain irrational longer than you can remain solvent. What does that mean? It means that it will take from you more than you have willing to give if you're going against the grain of the money flow. It will be purported as a gravy train, and you're saying this shouldn't be happening. And if you try to go against that grain, it's going to wipe you out. You're going to become insolvent. The way that a lot of these companies and business were before the pandemic kicked off, and when the pandemic kicked off and it turned out they had their house in order, they were fiduciary irresponsible. And guess what? They sat there with their hand out for the government just like everybody else. These billions and billion-dollar companies, and they had their hand out before your hand, and knowing you needed the money the most, and they turned around and got bailed out. Airline industry. They were giving out, them EILD loans and PPE loans to everybody. Y'all was right there with us when we were sitting there breaking this stuff down. It was crazy. They gave the Lakers $4 million. They gave Harvard, the school, they gave them like $20 million. Like, I was sitting there like, we were laughing out behind her, like, and they didn't even check them on it. They just already like, yep, give it to. And Main Street, small mom and pop businesses, it was like pulling teeth for them to get that money to keep their businesses afloat. This is your system. This is your government. Antiquated, backwards, dusted, still like an adult settings. If we had to deal with computers of old school to today, old school facsimile, this is your government. This is supposed to be the richest nation on the planet working with antiquated business models. Somebody make that make sense. Why? Because they're not excited about improving it fast. Why? Because they like it working in a dinosaur relic aspect that it is now. It keeps it complicated for the average person to learn how this stuff really works. Bada bing. If you don't know where to look, again, how you gonna find out whether or not somebody robbing you or not? Again, how the saying goes, scratch a lie, find the thief. When that Ray Charles mama that said that, right? Scratch a lie, find the thief.
Yep.
We figured out how to scratch the lie now and find the thieves. We know who's stealing from you, right? We know who's stealing from you. And you should know who's stealing from you. To the point where we stop all this kind of infighting and bickering amongst one another, and this so-called competitive landscape that they kind of made it be that way. They don't want to keep citizens fighting each other so they can keep stealing your money and running it out the back door. That's how the system is set up. Keep you either at the Coliseum on Sundays and Saturdays. Shout out to all my sport people. No shots fired, but shots fired. All right. Keep you inebriated on these little junk shows that ain't teach you nothing about real life. Keep your kids distracted on things that, again, whether it's useful for their their cognitive level, building skills or not, again, they have to be able to understand proper application. It's all about keeping people distracted while they keep running money out the back door. Again, they did a $1.5 trillion bill at 1 a.m. in the morning. Congress did. Popped it the next day on the newsreel saying that the House approved a $1.5 trillion aid package to deal with government shutdown, to deal with Ukraine, and they stripped the COVID part of the money out. The money that they were supposed to have for COVID to deal with COVID, guess what they did with it? They took it out and they added the money for Ukraine in that slot. What's happening right now with COVID again? It's starting to go back up. So now that money is supposed to have allocated for COVID, whether you for or you against it, it's not even in this latest $1.5 trillion that they've improved overnight. Your tax dollars are going to Ukraine. Is Ukraine house more important than your house? I asked y'all that question. Some people from the politics like, man, that's business sensitive. Bruh, America is insensitive. America has been insensitive since inception. So how in the world I'm finna act like I don't see it and I'm supposed to be comfortable with that? I'm just asking how many of y'all voted for that money to go to Ukraine? I'm just asking for a friend. So again, you got to know how to play ball. These yield inversions are just, mere signals. They're just mere signals of what's coming. Wall Street gonna downplay these long as they could. Why? Because they play from a playbook of what? Downplaying everything. They like to downplay everything. Why? Because it gives them the excuse to be what? Risk on. Their duration is that they can outlast you. That's what this conversation is about. They're gonna outlast you if you don't understand how the system really works. If you tell yourself, hey, okay, I got to wait till the market bottoms out again. Well, what does that look like in the market? Now, when I say that, I'm saying it from the aspect of you need to start learning at this day in present how to plan for opportunities like that. Whether you engage in the market right now or not, you don't have to have your money, what they call it, actively in the market hot. You can have money sitting in the broker account ready to rock. Because we like to say what? It's best to be what? Stay ready so you don't have to worry about getting ready. You don't have, you got money sitting in the bank collecting dust and not inside your broker account ready to rock, you backwards hustler. Meaning if you got money in the savings that's collecting none on the money market funds, that's you actually paying money to have in the money market fund now because it's trash. Interest rate's too low. You ain't making money in that field right now. It's starting to go up a little bit lately because rates are starting to go up, but still it's not even enough to balance out the inflation and the taxation. You backwards hustling. You think you're doing it because you got a little, again, this ain't me ranting on your scenario, but guess what? Until you learn how this stuff really works, you backwards hustling. And they know that. because they're not going to teach you how to be prepared for this. You know, how to be in a position where you can be ready to rock when it's ready to rock, when it's time to go high, quote unquote. All this stuff is relevant. Why? Because most people are not going to really go through the intricacies of how to make this stuff make sense. Why? They're going to charge a ton of money for it, or they're going to kind of give you what they call base case information, and then you go out there and figure it out on your own. Again, either way, as long as you're getting something, but you shouldn't have to pay slave wages, you know, in this case, college tuition to learn how to do this, or to figure out exactly where your money is coming from or where it's going, right? Where it's going, right? We know where it's going, right? It's going to hand some investment banker, right? Right? So again, we have to be prudent. We have to realize this is how the system is set up. Yield inversions are serious business. Why? Because they speak to the what? They speak to what? The big word in the room on top of everything we wrote on this screen.
Recession.
They speak to recession. And recession is what? 2 quarters of what? No growth, which brings in the ideal of recession. And that's spawned by what? Backtracking to what? Yield inversions that give you the signals that these things are now what? Relevant and prevalent. You know how to track all this stuff once you know how to hunt. Then you know when people really get scared, because all the average American needs to do what? Oh, we're in a recession. Instantly in their mind, their computer chip kicks on and say, well, I got to start what? Saving more. I got to protect my money. But if you start saving more in a moment where we already have what? A lot of money chasing few goods, and you don't really have ample production, and you start saving more, that means money ain't circulating through the system to feed this beast, this greedy beast. Oh boy. And inflation is, again, we know it's well above, 14, 15% now, even though they're saying 7, 8%. We know that's a lie, right? But we'll play along with their little lying game. Recipe for disaster. And you still got conflict, and you got supply chain issue, and you got major corporation. Well, you might call that China, like America corporation itself. Big countries like that going back into lockdown for whatever odd reason, how long, it's exacerbating the situation even more. So duration, how long do you have it, to be, how long do you have, I'm speaking to all of us now, how long do you have to now properly put yourself in the perspective and put things in the perspective so you can plan accordingly to deal with all these different factors. As an investor, homeowner, business owner, parent that's trying to, plan for your kids' future, college, whatever. And what tools are you using to find money? Notice that. What tools are you using to find money? I didn't say go work for it. Now you can, but to find money, respect it to it. Well, your money has to go work for you, because that's how big money works. It allows that to happen. They're going to use the duration game. They're going to wait you out. They're going to Warren Buffett you out. Case in point, Warren Buffett, right? You should not think about holding stock for what? For 10 seconds, you don't plan on holding for 10 years. That model changes here and there because of the situation, how markets are, but still, you still got to be in the game, or mentally in the game, where you start thinking well into the future is the whole point behind that. Actively, whether you add money or you're not, or if you just sitting on your hands, you still ready because you got money in there, brokerage account ready to rock. Either way, you're actively in a position where you can make moves. That comes in proper due diligence and proper discipline, and understanding how the system works. Markets can remain irrational longer than you can remain solvent. Know that. Some would say, man, this market is just going up like this. Why is it going up on all this bad news? Well, because again, they operate under the what? Under the Tina rule, right? We talked about it before, ain't nothing new. The markets love trying to price in what? Uncertain. They operate under the Tina rule. The Tina rule is very simple. There is no other alternative. They feel like there's nothing else they can put their money in right now. Well, what are they really buying the most in the markets right now? Is it growth stock? Is it Apple? Is it this, that, and the third? There's other sectors in this stuff too, right? We know that. They ain't just one sector. Instantly, right out the gate, right? Let's matter of fact, let's do this real quick. Let's go to the let's go over to the spiders list. Right. Let's go to, let me see if this I think this is the one here. Yep. Let's go over to the good old Wheel of Fortune. Right. This is the real Wheel of Fortune. I don't know what y'all be talking about. That Pat Sajak stuff. This is the real Wheel of Fortune. Y'all with me here? Right?
Yes, sir.
Boy, you land on one of these wheels right here in the right place at the right time. Look.
Bang.
I'm to my boy. You seen Jugger show up and cut up on one of them shows. They hit a lick, boy. And you land on
More money.
You know what I'm saying? But it's the real Wheel of Fortune right here. Now, instantly, this is, again, we're talking about the S&P 500. Most of you guys know what that is. 500 of America's greatest what? Blue chip, tech stock, all kind of stuff, right? Again, well-founded business, whether they are or not, that could be determined or discussed, whatever, debated. But for the most part, it gives you a macro understanding and a micro understanding of what your economy looks like through these particular different industries that make up your existence, the things that you utilize from product perspective, services, etc. Right? Right. And it's important to know that because markets are now feeding off of what? It's feeding off of the value.
Money.
Say again.
Printing money.
All right. Printing money. The idea of how people, again, rediversify their portfolios and going from one side of the ship to the other side of the ship. They run into different sectors right now.
Mm-hmm.
That's what Wall Street do. That's all they've ever done. That's what they will continue to do. They just move money around back and forth. One day they this side, next day they that side. As the song go, what the rapper name? What it must be two sides? Who sang that song? Right, must be two sides. That's Wall Street in a nutshell. Wall Street must be two sides. They essentially what they are. They have you thinking one way, and they backdoor an investment portfolio or a scenario, for that next big move in somewhere else. They build a front running, as one would say. Right?
Right.
It's important to know this stuff, guys. Why? Because this is how the system is set up, again, in a way to what? Keep, if nothing else, keep a risk on when you think there should be risk off. Like me, I was just like, world falling apart. How y'all got money to invest in this or invest in that? Why y'all not really, planning for it? Because these people then got spoiled. They didn't had literally 20 plus years, dang near, of this kind of level of insanity in markets where they figured out, they've been figuring this stuff out, how to continuously keep the drum beating through catastrophes, famine, pestilence, war, you name it. They figured out a way to keep this market running. When before a lot of these things are hit and the market is take a reprieve. Okay, we got to dive. We got to reassess this. The Federal Reserve as a whole is responsible for it the most, of course. The Treasury is complicit because they allowed the government and the Congress as a whole are basically supposed to be the controllers of all this stuff. They close their eyes, right? They cover their ears and they hide. They don't speak. They see no evil, hear no evil, speak no evil, because a lot of the people are what? Invested in these same companies that get kickbacks from them too, through lobbies.
Right. Mm-hmm.
You think they're gonna mess up they backdoor checks like that when they can pencil or hold up a bill that may affect these companies? It's sitting on their desk, on the corner of their desk collecting dust. They won't push that bill through at the expense of what? The American taxpayer. So let's see what's popping right now, and we'll make this thing short when we get off here. What are some of the sectors right now? If I was actually, I'll just generally, now that we've seen money rotating because of inflation and this whole issue with war, this, that, and the third, what are some of the sectors right now that are benefiting in this marketplace because of all these different headwinds that we discussed earlier? Interest rates going up. What are some of the sectors benefiting from this?
Financials, energy.
So let's do one at a time. So financials, right? So let's just say hypothetically, right now, the financials, right, which is the XLF, right? As y'all see the terminology here, when it comes to deal with financials here, diversified financial services firms, insurance, banks, capital markets, consumer finance, thrift companies, they're saving plans, stuff like that, mutuals, whatever, are featured in this index. Among the stocks included in the index of what? Berkshire Hathaway, JP Morgan, Wells Fargo, Banks Corp, Citigroup. Y'all know those types, right?
Mm-hmm.
Now, how do a financial sector company, whatever, benefit from those kind of issues that we spoke about earlier?
Interest rates.
So interest rates going up. So they make their money essentially by through what? Interest rates, right?
Yeah. Loans.
So we're at the very beginning of this, all right? Mortgages and stuff like that, right? Loans.
Yeah.
We're at the beginning stage of this whole idea of this stuff really hitting the fan. Now it's been happening, right? But it's getting more attention right now. Make sense? So a lot of these financial stocks right now have yet to really truly benefit from rate hikes right now. Why? The Fed just did a quarter basis point. You got inflation at 12 or 15% realistically, organically, even though on paper they're saying it's 8%. And they raised interest rates a quarter basis point. Said we finna fight inflation. So is the financial service sector really gonna make money off a quarter basis point as of right now?
No, not necessarily. That's not enough. But you know,
That's yep.
Future growth, yes, that will
It's
be
coming.
something to get in right now because you know the price is really low on it. It's not really moving yet, and like you said, they haven't really raised the rates enough to do any type of damage to push financials up. So to me, that's the signal. Like, okay, I should get in now before they really start ramping it up. Possibly. Like you said, a quarter basis point, that's really nothing. It's kind of like a slap in the face. It ain't nothing. When they do, like a 50 basis or a 1 point, then that can be taken as okay, that might hurt. That's gonna be something significant. That probably will move financials up. If you know what I mean.
So I had to be quiet and let you get it all out. Because I knew that wisdom gonna kick in. You're gonna like, okay, I'm gonna connect these dots. All right. This is how we talked about the game of what? This is a game of what? Duration.
Facts.
Front running. You don't think they're planning now for that potentiality? They sure are. Because it's coming. Every day is a threat that they need to do more than a quarter base point. Now we're at 50, right? I think on the future fund rates, we're sitting at what 60, 70% for 50% base case bills raised in May. When before they were teetering around the idea of giving the 50 in the first beginning, they know they should have did it, but they used the excuse of what? Russia and Ukraine not to do it. Ain't that something? Kick that can down the road just a little longer.
Yeah.
Let's rape the American people, for lack of better words, terminology. Let's go in their pockets one more good, 2-3 months.
That's essentially what it is, though. That's essentially what they're doing. It's crazy that, you can get robbed and you not even know it. And you don't even look at it as getting robbed. You don't even feel it, but but you look at the gas prices, you look at groceries like, dang.
You're getting robbed.
Yeah.
You feeling that gas pump, but
they try to ignore it though. Like, it don't matter. I'm gonna get my check anyway. But the reality is, you can't really, depend on that because you might be getting laid off soon. You know what I'm saying? Just like, that post I made on IG the other day when they was talking about Applebee's.
We talking about McDonald's. Like, when did we talk about McDonald's? Like 2020, like the robotic aspect of AI. We were talking about AI stocks back then. How they gonna automate the restaurant industry? Right. They got a robot on flipping fries and flipping burger. They don't need you to be. Look, they don't need you, boy.
And just
when they had them robots at Popeye, boy, they're gonna be game over. But just like, hold up, Miss Betts ain't back there frying that chicken. But look, I can't do Popeyes.
Thanks. And just
they're gonna have a heart attack. Who did them robots back there frying the chicken?
Yeah. And the simple fact that companies are gonna have to choose between paying the prices to get their products and goods delivered, or laying off workers. So
they're streamlining the same way you would think the government need to be cutting out all the froth and the fakeness and helping American people have a comfortable wage of living. Companies are saying, okay, well, how can I make sure we still have maximum profit growth and potential when we already moving towards a more robotic, AI environment anyway? Guess what? That machine cost me what? This up front, but over time, it's going to pay for what? It's going to pay for itself. Duration. pricing you out. You want a $15 pay raise? Okay, fine. I'm gonna go get me one of the robots, and they're gonna do the work of 2 or 3 of y'all together, and they ain't got to do nothing but just keep it, the computer program coding right, and it's gonna work tirelessly. It's not gonna take smoke breaks, bathroom breaks, Facebook post breaks, tea runs to the cooler. Couldn't make this stuff up. Again, jokers, look, all right. But see, the importance of it is that this is why you have to have this conversation with your young folk, and you have to teach them about innovation, how this stuff really works, engineering, disregard of how the future is setting up, AI, etc. So they know exactly, okay, if they're not going to be putting in what they call the physical labor, they could do it through what? Through the investment side. Or they could be taking coding classes to write the codes for these robots. It's so many different ways to look at it. You're gonna have to be progressive more than you can even imagine in your life. Right now is the best time to start really getting serious about getting you a wealth of knowledge underneath your belt, mental belt. Why? Because you can't take the role of, again, simple ignorance anymore. I didn't know. They're gonna price you out. They're gonna price you out. They're already pricing you out. They are already pricing you out. They took literally $7 trillion of taxpayers' money, and it's sitting in the pockets of Jeff Bezos, Elon Musk, Buffett, Tudor John, Leon Koopman, Dalio. It's sitting in the pocket of big people, corporations, Apple, Nvidia. It's sitting in their pockets, majority of it. And the rest of it sitting on the balance sheet of the Fed that printed it digitally, and they talking about they got to unwind that balance sheet. That's essentially, that's robbery. They stole taxpayer money and they sitting on it in the form of that balance sheet. Y'all want to go see what that balance sheet look like? Like women that Clayton Bisbee on Dave Chappelle. Y'all want to see my face? Y'all want to see my face? All right, y'all want to see y'all want to see the face of America? This is the face of America right here.
Pull it up.
Right? Like take it to trial. They said, take that thing to trial. This is the face of America right here, guys.
Oh, but you saying that's 800 million right there?
Woo, boy, at least 8 million. At least 8 million.
8 million?
8.9 million at least. Oh, come on now. You know that about 8.9. You see that 8.9 million.
No trillion.
Yo, Richard, you can wait. You had to say it. Only got $8.9 million of taxpayer money over Rich. Come on now. You know that's only 8.9 million. Only 8.9. Joking like, bro, but I'm joking on these. Most people out there, we follow this stuff. And I'm happy that more people are starting to get excited about this stuff. Boy, they don't even know. If they only knew, if they saying go, if they only knew, how that song go about Leah, if they only knew, boy. You think that little raid on Washington was something? If these people really, all right, if they really understood the complexity beyond the propaganda, the media's, again, it's another conversation for another day. I'm not gonna keep this much longer. I gotta get it's getting real in the field, guys. Money printing supposedly supposed to have stopped. Literally, I'm going to show you. It's supposed to have stopped right about here. Around about, it was the 19th to the 16th, and around there. We're supposed to stop. We're supposed to stop before the 16th, because the Fred updates every Wednesday. It updates every Wednesday. Literally, we supposed to have stopped. I think it was like the 14th, one of them days.
Yeah.
At that point, we were sitting at 8 point. What we're sitting at? It was like 8.91. That's where we stopped at, right there, guys. That's when the money printer was shut down. So there's been no more money printed. $8.9 million, right?
That was the pump fake
trillion, right? We're gonna see it now. I'm just gonna keep people in the cement. We're supposed to start at 8.9 trillion. Look right here.
10 trillion first.
We went from there to here. We caught that on our live stream. They printed an additional 40 plus billion when they wasn't supposed to. And guess what? They added another additional what? They near 20 billion since then.
Yeah.
They came out before Congress, before everybody, before the American people said, we're shutting down the printers. We're not going to print any more money. We know that, even though they didn't admit that they are the cause for inflation, because they are. We know monetary phenomenon, the aspect of money printing. It always causes inflation, always. they didn't slip in additional dang near what? Dang near $60+ billion when they're supposed to should have cut the print off. Who gonna hold these people accountable? Ain't nobody getting fired, ain't nobody been asking it, ain't nobody going to print. Again, it's the ideal that they're exacerbating, kicking the can down the road, duration, and still giving money to Wall Street. Is that money going to Main Street? Did that extra $60 billion that they printed when they're supposed to stop, did that money go to Main Street? I'm asking for a friend, anybody.
Right.
Did
Nope.
did that money go to help inflation? Or did it help exacerbate inflation, making it worse?
Making it worse.
But they told you that they fighting inflation, guys. They got unlimited tools at their disposal to fight inflation. That's what they said. That's not what I said. That's what they said. We're going to fight inflation. We're going to deal with this. It's getting out of control now. We thought it was transitory, but it's not transitory as we thought because of this. The supply chain issues ain't gotten any better, blah, 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 all the lies, right? The lies. And yet they still print money. You want to realize, if people ask the question, why did Wall Street rally over the last week and a half?
Mm-hmm.
If they asking questions, is it because they're not initiated? They don't know. They don't know how to go figure out why there's this party going on and all this money still coming to the market. Why? Because we know where to go track it. If we see this thing going up, what does that tell you? Majority of that money, as it always has been doing, it's going right into Wall Street. You think these people risk on, they ain't had a backdrop to think that we still got a little extra money coming in from somewhere? Wall Street thrives off stimulus. Duration. They can keep this man, look. And this money right here is sitting in the Federal Reserve, 8.9 trillion. Who money
Not
is that?
8.9 trillion.
No, at least 8.9 million. My bad. I messed that up, guys. My bad. Y'all, I'm reading it wrong.
I thought it was 8.9 trillion too, the Fed balance sheet.
See how they, boy, to my, you couldn't make this stuff up. Sitting on taxpayer money. Sitting on it, bro.
And we don't even know, Oba. We don't even know. Majority of people don't even know.
Don't have a clue.
Don't even care, really. You know,
that's the hard part about it. That's the one that hurts because they're asking questions of the government, and the government's gonna keep lying like they always do, and they're gonna take money that they just printed a fresh batch or planning to even print more, and that money's going to Ukraine. It's finna go to building houses and giving subsidies and good credit for all these hundreds of thousands of Ukrainians finna come here, while you are already hurting at what? The gas pump, on your mortgage, on your rent, on your student loan, on your child care, on all your other ancillary bills. You hurting, you don't get a bailout. In come these people that you don't know nothing about. Instantly, they're finna get housing, credit, cash, $13 billion of your money. Somebody make that make sense to me. Anybody? I'm listening. Maybe I'm the crazy one.
We going to travel over. We going out of town, out of the country. You know, none of that stuff don't matter. It's irrelevant. I'm about to turn up. You know, I've been needing a vacation all year after all this COVID stuff. You over here talking about, you know, Fed balance sheet. I don't care nothing about that.
I'm finna hit the latest so-and-so, bro. I'm finna blow it all. I'm finna go to the club, make it rain. Whew.
I just got this VIP section. What you talking about, man? This
unlimited. Keep it running. Keep a tab open. They sitting on $8.9 trillion of taxpayers' money. Sitting on it. That they printed digitally out of thin air. And they still won't give it to the people.
Nope.
Oh, but you know, we formulated to do mortgage-backed security lending and T-bill bond buying, monetizing debt, which is actually all right, illegal. I keep saying that, but I got to keep saying it. And, we're trying to, make sure that we keep, America from defaulting on this debt and all this. The economy is strong. The consumer is flush with cash. They got all this cash. Investors, people got all this cash. If they got all this cash, where they spending it at right now? Grocery bills and gas and energy bill.
Facts.
How they buying jet skis and man, look, boy, these people will sell y'all. Again, I'm gonna get off that area because I know people get crazy when I go into that mode because they don't understand proper research methodology and how context work and how you can backtrack lies when it comes to media. Media is the worst machine. American media is the worst machine ever to get your I call hardline factual information from. If you go into a mainstream media to get that, you taking an L out the gate. You already taking an L. They got more money spent in censoring information than they do in trying to provide you proper primary sources. Mm-hmm. Couldn't make this stuff up. People are still. Oh yeah, just sidebar. FDA is supposed to vote on making a second booster shot mandatory next week. They slipped that right underneath everybody's nose.
Yep.
Second booster shot coming next week. Plan for it. Keep your eye on Moderna, Pfizer, AstraZeneca, Novavax, those type of little hint, hint, wink, wink. Just keep your eye on them. Right. It's all but certain they're gonna do it too. You can start seeing Dr. Fauci a little bit more on the conversation on TV again. Now all of a sudden, because COVID starting, China again on lockdown. China should have an ugly market tonight, no doubt. China should be blood red. Now it should be down about 2% tonight. I'm just gonna throw them out there. I think China be down near about 2% tonight when they open up in their futures market. They locked down Shanghai again. We spoke about that earlier. Go figure. Tesla and Apple should be, especially Tesla because they got a Shanghai factory, right? But definitely Apple too. So that'd be interesting to see if they try to keep them stocks green tomorrow. They're gonna try possible, but it shouldn't likely be that way. Based upon Shanghai going, into lockdown. Mm-hmm. Again, taxpayers' money. Look at this jump up here. They went from 4 all the way to 9. That's 5 trillion in 2 years. Y'all know the typical rate that the Fed prints money during a presidential cycle. Typical, most presidents run on about a trillion to 2 trillion during a presidential cycle.
Right.
We didn't print it 5 in under 2 years.
That's crazy.
The whole idea when it was cutting rates and trying to lower the balance sheet here, when they got down close to them low 3s, then in came what? See right there? That date is, we told y'all for read, September, right? What happened in September 2019? There it is right there, right on your face.
Start printing.
They start printing again. They were already printing even back here. They were printing then. They start really printing back here. This is the time to show you how it kicked off. What happened? Subprime lending crisis happened. See right here? Mm-hmm. It went from lived a flat line and instantly jumped up overnight. We talking about this is monetary phenomenon that y'all see. People don't understand. Maybe all right. I'm having a nerd moment now. That's why I can't get it out. But I'll be comfortable here and say this. This is the extent of your money, taxpayers' money, being utilized to bail out criminal organizations in terms of bad fiduciary responsibility businesses, banks, hedge funds, corporations, etc. The majority of this money is supposed to be helping you survive. These are your tax dollars, but it's going in the hands of Goldman Sachs and this, that, the third, BlackRock, etc. It went from flatline all the way up here in how many years? 2008, 2000 to basically 2022. How many years is that? What's 2008 to 2022?
14 years.
14 years. It went from literally, as you see here, right? Y'all see this here, right? It literally went from about 900 billion, right? We were working with that in Fed balance sheet. They were keeping the economy afloat to 9 trillion with a T. That's what? The market just did 100x.
Right.
in terms of Fed printing money. Yikes. Yikes. And people were figuring out, well, why is the system, why is this other? Here's your money right here. They sitting on it. All right. That's enough. I'm gonna leave it at that. Duration, due diligence, and discipline. You guys gotta know how this game works. When you're putting together an investment thesis, you gotta know how this game works. It's dirty out here, right? It's a dog eat dog world, even in the financial literacy market, in the financial literacy space. What we're trying to do is raise the antenna of a lot of people who have the interest, who forcibly, try to overlook, this information. We're just trying to do our part to bring awareness to this stuff. Why? Because again, they're going to price you out one way or the other. They're going to price you out through your own simple ignorance, and they're not going to care about it. Why? Because they're going to say you're supposed to have been doing what you need to do to protect your situation. You chose not to. You chose to turn up. You chose to whatever, mismanage whatever, and that's on you. Why? Because a lot of the stuff that we've been trying to hint to y'all is that you got to own assets. They don't say that on a sound bite, but ultimately that stuff is not being pushed over the airways continuously, like the propaganda they do about Russia, whatever. Right. Those come off. You had to be literally in the right place at the right time to hear that information. And then they're going to run it one time and that's it, right? Not going to hear it longer. That's why channels like this exist. That's why people like you all exist, because you guys are the vanguard to help other people come to the light of this stuff. Why? Because this ain't a scenario where you have, it's in my opinion, it's non-negotiable. This information is non-negotiable at this point. Right. That's how I look at it. If you feel like it's not, what's your other alternative to survive a system that's set up the way it's going and the way that this, handling business right now? How you gonna survive that? I'm open ears here. I want to hear everybody else's blueprint, or they plan a procedure to dodge all that other stuff. I'm waiting. We will, happily invite people on. Look, I want to hear it. Thanks. Because just like they say, Tina, in terms of the investment market, is Tina also for Main Street that they need to start waking up and stop all this goofiness and get serious about this. There is no other alternative. What's your other alternative? You're getting priced out. What's your other alternative? You got to figure out how to grow something. You got to grow some money. That's the whole point of this. It could be business ownership, entrepreneur endeavor, real estate, whatever you're doing, investments. You got to figure out something beyond working for Mr. Charlie alone. Because again, Wall Street ain't missing no meals. Even when they supposed to stop the printer, Wall Street still ain't missing no meals right now. They still ain't missing no meals right now. Forex, crypto, binary options, derivative option markets, whatever, credit swap, DeFi, all that, equities, you name it. Wall Street ain't missing no meals, guys. And they're not going to stop. And they're not going to stop. Right? It's, hold up, where that thing at right here? Right here, real quick here. Really quick here. Where we at? 1 second. 1 second, family. Where we at?
Technology, all this new efficiency, and yet it now requires 2 people to finance a household, whereas in the 50s it only needed 1 person working. And the reason for that is not because these washing machines and everything are more expensive. It's because of all the debt, and it's because effectively the banking sector is creaming it off from everybody else. So a growing banking sector isn't a sign, it's not a good thing. If the banking sector is growing, it's either that it's becoming less efficient or it's becoming a parasite on the rest of the economy. And that's, we can talk about the banking sector becoming 4%, 5%, 6% of GDP. What's happening to the rest of the economy? that's becoming 96, 95, 94% of GDP. We've got to get switched on to this now. You know, if we want to have a chance of tackling any of the other big social issues, you've got to figure out the money issue.
The poorest in the world pay for crises, even when they've not benefited from the often reckless and speculative booms, like the housing boom in Ireland that preceded that crisis. You know, over the last 30 years, we've seen income differentials increase, so that the rich have got much, much richer. And ordinary people haven't. They've stayed the same, or they've got poorer. And one of the ways that the economy was kept going was by providing cheap credit, was by providing debt to those very people who couldn't really afford things anymore. And so they kept buying. And when it collapses, it's those same people that have to pay once again, even though in many ways they were the victims the first time.
As a result of the crises, the Bank of England has bought corporate debt and repackaged it at lower rates of interest. Yet the average person is being asked to pay more than ever to borrow on overdrafts and credit cards.
Debts between the very wealthy or between governments can always be renegotiated, and always have been throughout world history. They're not anything set in stone. It's generally speaking, when you have debts owed by the poor to the rich, that suddenly debts become a sacred obligation, more important than anything else. The idea of renegotiating them becomes unthinkable.
It's only when you have debts, then all of a sudden they're coming from you. They're coming for you with the bloodhounds. They're coming for you for your last born, your firstborn. They're coming for everything. But when the government got, private industry and big ministers got debt, brush it up, sweep it on the rug. When he said, we didn't, none of that stuff matters. They got, because they know most people don't understand how this stuff works, and they're complicit to their own demise. It's like we say, people inherently vote against their own interests. That's a known thing in the political science realm of understanding how voting values work. When people vote through emotion, they lose. When they vote through proper understanding and understanding they have a purpose with their passion, they win. Just voting because you have the quote unquote right to vote, it's the most dumbest thing I hear people do and say. When I see people popping up, I'm like, okay, what did you vote for? Well, anybody except that other candidate. Okay, but what are you looking to get out of it? Well, that'll be up for them to decide. And the government can't do nothing for the average person anyway. They got too busy. They too busy trying to, do bigger things, really. Like what? I don't know, maybe deal with stuff that's overseas or something. It's the reason why Amazon can skip on a $20 billion tax bill. And you can't skip on a $200 tax bill. Again, we're not gonna make it about that. We'll be here for hours and hours. I'm gonna end it at that, guys. Again, duration. Understand that this is a game of trying to wait you out. Right? If you allow it to become that scenario and you don't figure out ways to increase your financial prowess and your financial literacy, this is what's gonna happen. This is essentially that's what's gonna happen. You got to get serious about figuring this stuff out now, guys. The turn up is always going to be around the block. It ain't going nowhere. Your money needs to be in fertile places. The idea that you have it on the ready or in the ready to go in the fertile places, that matters. What you're learning now is going to benefit you more ways than you can even imagine. Utilize it, expand on it, expound on it. Get in think tanks and conversations to get people engaged in these conversations. Stop talking about the usual. That's just from my opinion. Man, all the other stuff can wait, bro. I'm straight on that. My circles are small for a reason. I ain't got time to waste anymore. And I definitely ain't got money to waste. The circle's small for a reason. Right? Ain't gonna do it just because of my age. It's reality that the saying goes, you know better, you do better. You know better, you do better. It's simple. This is the reality that you're stuck with. Because you're talking about the one thing that makes everybody bow down to is what? The idea of how the system works, how the monetary system works. Those who have and those who have not. Where else would you want to spend a majority of your time and at least trying to figure out how things really work than dealing with this, direct source in terms of what this system is all about. Capitalism as a whole, the monetary system as a whole, the debt system as a whole, these things become, again, in my opinion, non-negotiable. Again, shout out to the state of Florida. Shout out to the state of Florida, making financial literacy mandatory. Shout out to the state of Florida. Somebody, waking up. So that's it, guys. So I ain't got nothing else, guys. I just want to come on and add a little weekend, again, let's, getting prepared for next week. We understand what's going on. A lot of you guys been doing your technical analysis, looking at the market, mapping it out. Again, deal of risk on in certain aspects, preparing for some inevitable moments in the markets, given the fact that we still have some underlying issues and, the whole issue with the war, inflation and commodity prices. I mean, it's endless, right? Again, nothing that we're not planning for or preparing for, right? You know where a lot of the majority of the money is hiding out at this point. Again, energy, some soft financial sector spending, a lot of those kind of places where the commodity markets are really ripping, or aluminum, nickels, and all kind of stuff. It ain't hard to go map that stuff out, right? It ain't hard to map it out. Right. So tune in next time we go live on the channel, guys. We appreciate everybody that came through today. I know, given the fact it's on a Sunday, most of you guys probably chilling with the family, maybe kicking back, again, finding me time for yourself, be it just watching the tube or just whatever, respect to that, that regard. You guys found time to come, come to the community university and our little, peer group here and just, expand on our brain cells a little bit. If it's just a little bit, that's more than enough for me, because we win it every time we put together a thought, at least a value, putting energy to a proper thought process. That's a positive, that's a net positive for us as investors, right? As entrepreneurs, right? As people who are serious about changing the dynamic of our situation, right? So shout out to everybody that came through today. We appreciate everybody. Like, share, subscribe it. Share it with your young folk. You got young folk, man, share this stuff with them, man. Get these kids excited about figuring out how the system works early, so they don't have to worry about, fighting it a lot later in their years, right? That's non-negotiable. It should be non-negotiable. They got time for video games and whatever, they got time for getting this information. You got to brainwash your children, or somebody's going to do it for you. I'll leave it at that. Peace, power, profit, everybody. Y'all have a good evening. Appreciate everybody. We'll see you guys on the next one. Peace, everybody.
Profit over. Peace.
Peace, family. Peace, everybody. Peace, everybody. Have a good evening, everybody. Peace, family.
Peace.
Peace, family.